Good evening. We were warned that this upsetting ride wasn't over, and the markets proved that in dramatic fashion today. What looked like a spectacular comeback run after Monday's Wall Street wipeout stumbled badly at the finish line. The markets falling into even deeper negative territory this afternoon, with the Dow shedding another 205 points. And so these are confusing times for a lot of Americans trying to protect their hard-earned savings. On one hand, the value of their investments is falling. On the other, indicators that might suggest our economy is doing just fine. CNBC's Carl Quintanilla is here with the big picture. Hello, Carl.
Hello, Lester. Today was not encouraging. Stocks are down 6 days in a row for the first time in 3 years, and a growing sense that more dramatic days lie ahead. It was the biggest opening rally of the year. A quick 400-point gain on the Dow, seen here on the right. Almost the mirror image of Monday's collapse on the left. But it couldn't hold. And since Friday, the Dow has fallen 6%, climbed 5%, and fallen again. That's a wider range than stocks have seen all year.
You will see markets trading around up and down for several days. These things are rarely resolved on a single day.
That early morning attempt courtesy of China, which cut interest rates overnight to give their slowing economy a boost. And some positive news back home. Good earnings from Best Buy, a strong consumer confidence survey.
That's what's one day.
Some investors said Monday's sell-off was so violent, there's simply not much damage left to be done.
I don't think it's going to have a very serious downward direction from here, no. I think there will be lots and lots of volatility.
That's because of a wild card, the Federal Reserve. It's kept interest rates near zero for years since the crisis. And while that's helped the U.S. recover, some argue it's created too much risk, as investors took advantage of all that cheap money, plowing it into oil drills, real estate, stocks, and even startups. If the Fed hikes rates next month or next year, the economy will increasingly have to stand on its own.
Would not be surprising to me if we're sitting here a year from now and 25% of the startups are gone.
Now, very few on Wall Street expect a full-blown recession in this country, but as stocks continue to decline, we may begin to talk about the effect on consumer sentiment and spending. Lester?
Carl, let's go back to that wild card you mentioned, that the feds may raise interest rates. Do we think that's going to have a lot to do with whether people should refinance quickly or buy a house?
Well, Fed officials have said they can envision a rate hike by the end of the year, but that it would be slow and gradual. But yes, once rates begin to rise, those mortgages will get more expensive too.
Carl Quintanilla, thank you.
Hey, NBC News fans, thanks for checking out our YouTube channel. Subscribe by clicking on that button down here, and then click on any of the videos over here to watch the latest interviews, show highlights, and digital exclusives. Thanks for watching.